Hi, everyone. Prof. Gordon here from Exam Success, and I'm going to show you how to crack the code on this question, make it nice and easy for you. So this is a really good example where they give you information for one company and ask you to figure something out for another company. So there's some key information in the question as you read it. The companies have identical transactions. Everything is the same except for just this one transaction. So it's going to come down and it's going to test you on this one concept. That's what you've got to get your mind around and recognize really quickly. So this is an exercise of capitalizing versus expensing. So that is the issue of what's coming here. So we've got the information from company X, and we've got to answer this for company Z. So of course, we've got to follow the directions that they give us here, calculate the return on equity using year-end equity. So of course, we're coming down to ROE is equal to the net income over the shareholders' equity. So we've got to find net income and equity for company Z. So how did I do this? What I did was I worked through the information from the incomes to build the income statement and a statement of shareholders' equity. There may be quicker ways to do this, but here's a way that I think that you can build this up. So as reading through this question, we've got all the information. I'm going to build it on the side here. So they tell us that company X has net income of 750,000. So let's just write that in here, 750,000. Okay, 750. And then they tell us that there's a tax rate of 25%. So there's going to be tax. Then there's going to be a figure for earnings before tax. So what is that figure? I can work backwards. The earnings before tax has got to be $1 million. How do I know that? Because 25% times 1 million, that's 250,000. That would be in taxes. And this would give me a net income figure of 750,000. All right, there we go. I'm starting to work my way up the income statement. Now, before earnings before tax, what do we have? Well, I'm going to try to work my way up a little bit further. I'm going to say, well, normally we'd have operating expenses. Well, what are the operating expenses that we would have here associated? Well, the only one that's in this question that's given is depreciation. So I'm going to have a depreciation expense. And that depreciation expense for this machine, as we can see, it's a $300,000 printer, and it has a 3-year useful life and 0 salvage value, and they use straight line depreciation. So I know the depreciation expense is going to be $100,000 for each year, or I guess it's 100,000 British pounds in this case. So if I work further up the income statement, so I can have earnings before interest, taxes, and depreciation and amortization. Let's work back. That's 1,100,000. I think that's probably far enough for us. This is the income statement for company X. Now let's go over to company Z. And everything is the same for company Z, except we expense the item here. We expense this printer. So we're going to have an expense, a figure for expenses of 300,000. So let's just put that in here at the top line here. Expense EXP 300,000. So what that means is now the EBITDA is going to be, instead of being 1,100,000, it's going to be 300,000 less. So it's going to be 800,000. Remember, everything else is the same. I didn't go all the way up to sales and such, but it would be the same. So I hope that you can do this connection right there. Now let's follow through. Company Z, depreciation expense. Well, there is no depreciation expense. We're not, this asset is not being depreciated. It was expensed. So the earnings before tax then are 800,000. And now we have our tax, and our tax is 25%. So 25% of 800,000 is 200,000. That's 200,000. And so the net income is going to be 600,000. 600,000. Okay, so we've got 600,000. So now we've got our figures here. We have the net income. So I can come down to my formula and I can put in my figure. So let's just make this a little bit easier to read there. Okay, so we'll put this in here as the net income. Net income, 600,000. All right, so we've got the top line here. And now we just need to get the equity. Now, I've had some students who just grabbed the equity of 10 million and they put that on the bottom and they got 6% and went for choice B. You got lucky. You got the right answer that way, but let's do it the correct way, okay? Just in case they change these numbers and they're a little bit closer and you can't do that. So we'll have to work through the statement of shareholders' equity. So in this case, let's start with company X. So we've got the beginning equity, I'm going to say B equity, beginning equity, will be adjusted for net income, add net income. Then we're going to subtract out any dividends that were paid, and this will equal the ending equity. So now let's work with what we're given. Okay, I don't know why I wrote that a little backwards there. That should be EQ, ending equity. Okay, so we're given the ending shareholders' equity of 10 million. So let's write that in here and let's work backwards. And remember, you've got to do this in about a minute and a half. Dividends are 0. Okay, 0. The net income, we have that as 750,000. So we're working backwards here. And from our calculations, we can get this, we can fill it in. So 10 million, let's work backwards here. Take off the 750,000. The beginning equity had to be 9,250,000. 9,250,000 plus the 750,000 equals the 10 million. Okay, company Z is exactly the same except for this transaction. So the beginning equity for company Z, beginning equity is going to be 9,250,000. All right, let's do the same thing. Let's add in the net income. The net income for company Z is 600,000. And there's no dividends because they're exactly the same in all of their transactions, except for this one. So the ending equity for company Z is going to be 9,850,000. 9,850,000. Let's get that in there. Okay. And we can now transfer that over to our formula here, 9,850,000. And if we do this math, we end up with 0.0609, which is pretty close to 6.09% or 6.1%, which is exactly choice B. And that cracks the code for this question. So make sure you can work through these statements. Make sure that you know the process. I think that's going to help you. And you need this kind of thinking to be able to crack the code on these CFA exam questions. Okay, I hope you found this helpful, and we'll end it right here.